Hello, and welcome back to Capital Gains. And today we have an important topic to discuss that's been making waves in the financial and real estate world. We'll be delving into the troubles of the 2023 housing market, with a particular focus on the recent challenges faced by one of the giants in the industry, Blackstone. Blackstone, the largest owner of commercial real estate globally, has seen its fortunes take a significant hit in the past year. In this video, we'll take a closer look at what's been happening, why it matters, and how it fits into the broader landscape of the 2023 housing market. But before we dive into the details, if you're new here, don't forget to hit that subscribe button and the notification bell so you never miss out on our latest updates and analyses on the world of finance, real estate, and more. As we head on to discuss the specifics of Blackstone's recent challenges, let's establish a bit of background. Blackstone, often referred to as the big player in the real estate game, is a global powerhouse in the world of commercial real estate. They own vast amounts of real estate assets, ranging from office spaces to residential properties and everything in between. In fact, they're the largest owner of commercial real estate on a global scale. The significance of Blackstone in the real estate world can't be overstated. Their strategies, investments, and performance can often serve as a barometer for the health of the real estate industry as a whole. Now, let's get to the heart of the matter, the financial challenges that Blackstone has been facing recently. It's been a turbulent year for the company, and this section is all about what's been going on behind the scenes. Blackstone has seen a sharp decline in its distributable earnings, which are essentially the profits that are distributed to shareholders after expenses. In fact, these earnings have plunged by a staggering 36% since the previous year. That's a substantial drop and has understandably raised eyebrows on Wall Street. But what's causing this significant decline in Blackstone's financial performance? A key factor contributing to this decline is the easing of value in its real estate investments. The company's real estate segment's distributable earnings have fallen by a remarkable 58% since the previous year. But it's important to note that this decline isn't solely because of lower property prices. A spokesperson for Blackstone clarified that this drop in earnings is due to fewer assets being sold, rather than a massive decrease in property values. So, while Blackstone's troubles are indeed a cause for concern, it's vital to understand the broader factors at play in the 2023 housing market. To understand the troubles Blackstone is facing in 2023, we need to take a step back and look at the bigger picture of the housing market this year. It's a market that's been through quite a transformation. The 2023 housing market is in a state of flux due to a combination of factors. The COVID-19 pandemic brought about significant changes in how we work and shop, which in turn impacted the real estate industry. Office and retail property valuations have been on a downward trend since the pandemic began. Lower occupancy rates, remote work, and shifts in consumer behavior have affected the demand for these types of properties. On top of the pandemic, the Federal Reserve's efforts to combat inflation by raising interest rates have also played a role in the challenges faced by the real estate market. Higher interest rates can make borrowing more expensive, which in turn can affect the ability of real estate developers and investors to finance new projects and manage existing properties. So, as we consider Blackstone's challenges in the context of these broader market dynamics, it becomes clear that the troubles they're experiencing aren't isolated. They're a reflection of the shifts and challenges in the 2023 housing market. Now that we've explored the broader market dynamics, let's dig deeper into one of the specific factors that have added to the housing market's challenges and affected Blackstone: the regional banking crisis. The recent regional banking crisis has cast a shadow over the real estate market. Lending to commercial real estate developers and managers largely comes from small and mid-sized banks, which have been particularly impacted by liquidity issues. In fact, about 80% of all bank loans for commercial properties come from regional banks, according to Goldman Sachs economists. These banks have faced the most severe pressure on liquidity. As a result, many regional banks have been forced to limit access to credit, making it more challenging for real estate developers and investors to secure the funding they need. The regional banking crisis has led to increased uncertainty and skepticism in the real estate market. Short sellers, in particular, have become more active, indicating demonstrating their belief that the market will continue to decline as regional banks restrict access to credit. In fact, real estate has become the most shorted industry globally and the third most shorted in the United States, according to S&P Global. So, the regional banking crisis has certainly added to the woes of the 2023 housing market, affecting both access to credit and market sentiment. Now, let's explore how Blackstone is responding to these challenges and the strategies they're employing. Amid the challenges faced by Blackstone and the real estate market, how is this industry giant responding? At this point, let's delve into Blackstone's strategies and their outlook. On a recent earnings call, Blackstone's CEO, Stephen Schwarzman, expressed confidence in the company's ability to weather adverse market conditions. Schwarzman's confidence signals that Blackstone has a plan in place to navigate the hurdles in the market. Jonathan Gray, Blackstone's president, emphasized during the earnings call that the company has diversified its investments. He pointed out that more troubled office real estate now accounts for only 2% of their holdings, a significant decrease from 61% in 2007. This diversification suggests that Blackstone has been proactive in managing its portfolio to adapt to the evolving real estate landscape. Gray also shared insights about how the recent banking stress has created an opportunity for Blackstone. As regional banks tighten their credit, Blackstone is in discussions with smaller banks to help provide financing to their clients. In Gray's words, the banking crisis and the subsequent shift in lending policies could create a golden moment for credit and provide more opportunities for Blackstone to step in as a financing provider. Blackstone, a major player in global commercial real estate, has seen a significant decline in its distributable earnings, primarily due to challenges within the real estate market. The broader housing market for 2023 has been influenced by a multitude of factors, including the enduring effects of the pandemic, changing work patterns, and increasing interest rates, which have contributed to declining property valuations and fluctuating demand. Additionally, the regional banking crisis has exacerbated issues by constraining credit availability for real estate developers and investors. Short sellers have emerged as a sign of increased market skepticism. Blackstone, however, is proactively adapting by diversifying its investments and exploring partnerships with smaller banks. This strategic approach demonstrates the company's intent to navigate the challenges and capitalize on opportunities in this evolving market. Understanding these dynamics is crucial as the real estate landscape continues to transform. For more content on finance, real estate, and other topics of interest, be sure to subscribe to our channel and click that notification bell. That way, you'll never miss out on our latest updates and analyses. Once again, thank you for being a part of our community, and we look forward to bringing you more insightful content right here on Capital Gains. Stay informed, stay curious, and until next time, take care.